Should be live now. Hi everyone,
Perfect.
and welcome to NewDeal Invest live Q&A. For those of you who haven't tuned in before, this is the third time we're going live. This is Mads Christiansen, Chief Investment Officer of NewDeal Invest, and I'm Jesper Beck, UX designer and part of the portfolio team. Mads and I have dedicated the next hour or so to answering your questions and discussing all the interesting topics that may arise on the way. Please ask your questions in English or in Danish if you prefer in the live chat below, and we'll try to get through as many questions today as we possibly can. And a disclaimer, of course, that none of what we discuss today should be considered investment advice. Always invest at your own risk. But to kick things off, Mads, I know we've been through quite a rough week this week in the markets, quite a big drawdown. And I know you've prepared a few slides to just take us through the current market situation. Do you want to start off with that?
Yeah. Yeah. Perfect. So so we had a drawdown this week, and markets have been going up for more than a year now to new highs, and fear greed was very much in greed mode, and then Iran launched missiles against Israel. And once you look at the geometric return, then when volatility goes up in the markets, then geometric returns go down. So what you need to do is to get less volatility in portfolios. That could be cash, or it could be value stocks or something like that. But that simply means that markets has to go down, and prices on tech has to go down. So that was the start of the week, and then the chip sector came out, and I guess it lost it to the moon narrative. ASML came out Tuesday with earnings with weak bookings. Bookings is the orders that they get, and that was kind of weak. One of the things that could contribute to this is that immersion DUV is now being prohibited for China, and that's one of the things that Chinese chip producers has been trying to buy a lot of, because that enables them to do the most advanced chips that they can make with the DUV technology. And and still 48% of revenue was from China for ASML. So that was that was sort of the first sign of some weakness, or at least not the to the moon narrative. And then TSMC came out Wednesday and lowered its growth outlook for the chip sector for 2024 to about 10%. And the weak parts were mobile and auto segment. Leading edge is still very strong. And then the chip sector felt weak, and that's kind of been the leading sector. Big tech has also been leading in this market, in this bull market, but big tech has sort of been falling off one by one. Tesla, Apple, and all the others. So left was the chip sector, and then on Friday. Supermicro Computer came out and did not pre-announce their outlook, and they've done that like the last 3, 4 quarters, something like that. When they announced the earnings day, they also had a pre-announce of what their earnings was, because it had been beating expectations, or company's own expectation each time, and they did not do this time. And then SMC, Supermicro Computer, started falling, and they're like their sales are something of a proxy for Nvidia. high performance compute sales as well. So Nvidia was weak, and then rumors surfaced that you could get H100 chips in China and that they were predominantly from supermicro So I think there was rumors that maybe supermicrocomputer could be hurt by this by regulators or something like that. Simon, one of our analysts, has been digging into it this weekend. He's from China and has been editing on one of the large tech internet sites in China. So he has access to a lot of info in these situations, and what he comes back with is that there is a market for H100 chips in China, and it seems like the vendors are actually at war with each other, and they should be prohibited there. So that's not really compliant or what the United States wanted to achieve, and and most of them are from a supermicrocomputer and some of them are from Dell. It's like 80% from Supermicro, and it's probably just because reflecting the market share right now in these AI data centers that Supermicrocomputer is ahead of Dell. So probably not much to slander SMCI for. Right now, I kind of expect a bounce from the drawdown we've had, and if we get that, then the big question is what to expect. And here's kind of my take on it. I really think that technological waves are what drives the stock market. Economists talk about all other factors, but when you look at it this way, then it seems appealing that it's tech that's driving it. So back in the 1970s, this is secular bear and bull markets. So the blue ones here are decades where the market doesn't do much, and then we have secular bull markets where the markets do a lot, and from like 1950 to 1970, the technological wave there was mass production, which was driving the market up, creating growth. Then in the 70s, the new technological wave was microprocessors. They were invented, but they were immaterial to economy. And then in the 80s to 2000, they created a secular bull market. We had not smartphones, but we had cell phones, and we had computers, we had networks, and then the microprocessor growth effect sort of waned out, and we had the internet, but the internet was not material on economy and driving growth in the zeros. And then from 2010, sort of fueled by 4G 4G technology, then we had a secular bull market again. So I think that technological waves are driving it, and I think that the internet era is kind of running out of fuels for driving growth. And then we have the AI technology, but it's not really much right now to drive the market. So I think we'll have a secular bear market now, not necessarily a crash, but just a little bit slow. And that's what I've also described here. So this chart here is the concentration in the markets, and in 1970 we had a big concentration. That was the what are they called? Nifty 50. The technology there was mass production, and then they kind of deteriorated as stars, and then we had PC, microprocessor technology coming up and creating big companies in the year 2000. And then we had a secular bear market again. And then we had the internet companies that grew up and became a concentrated part of the market now in year 2020. And if you compare here, you see that they've been founded in the 80s and the 90s and the zeros. and they were really growing in the zeros, even though the market was not doing a lot. And I think we'll get the same here. We'll get a secular bear market, and we need to be invested in AI stocks for the next 5 years to get a decent return. You see it here in the zeros. The red ones are the leaders of the market cap of Nasdaq of 2000, and they're not really growing in the aftermath of the .com. And there was a specific reason for that. I'm not going to go into that now. But we see the blue ones here, which are the interesting. That's a new technology. Small companies that are emerging to become the big companies, big enough to take the indices higher and create a secular bull market again. So we have a secular bear market whilst the new technology is too small to really lift the indices. And then we have a secular bull market. And right now, AI is just too little a part of the economy. If you think about big tech right now, the vast majority of their income is related to the internet economy and not really to AI. And then you have a few AI companies. You have Nvidia, and really not many which are AI companies. So AI is immaterial to economy right now, and I don't think big tech is going to be growing that much that they can fuel a secular bull market in the coming years. But still, AI and AI companies will grow rapidly. So that's what we need to be invested in. And even though people might say that tech growth died after 2024, if big tech growth is becoming weak, then we'll still have a lot of tech companies that are really growing, like Google, Apple, Intuit, Priceline. Salesforce was in the zeros, whilst tech was dead was the narrative. Yeah.
All right.
So yeah.
So you're thinking we're going into a little bit more of a quiet time. I certainly don't think I'd even really mind that, given all the craziness we've had since just COVID and everything.
Yeah. Yeah, I think it could resemble the zeros with a
Yeah,
flat indices, and you need to look for the next technology generation.
but just let me get this straight. You don't think that the whole AI stage is at the same level as sort of the dot-com bubble, where we had all these pumped up companies that didn't bring any value yet? We're not
No,
quite in that scenario, right?
I think what people think is that the .com was pumped up .com internet companies,
Hmm.
and Amazon was pumped up, and it fell 95%. But Amazon was a very small company, so the big companies that were big at the .com, that was the mobile phone companies. It was the network companies. There were some mastodons. Laying down fibers in America and lending a lot of money. And then it was the PC industry. So there was actually a lot of loans in these companies. They were creating a lot of debt to buy up these networks and to buy up each other. And a lot of it was hardware, so it was prone to get to be hit by cyclicality, and that was what happened. The demand for PC and the PC industry just waned after the .com crash, and then they had competition from Taiwan, from China, from Japan, and they were not so. It was other factors actually that made that sort of resulted in the companies not coming back from the crash. So the internet companies that were good, they became good winners, and they were back to their highs after 2-3 years for many instances. So yeah,
Mm.
so I think there is a narrative fall there. And then if you compare to today, we have big tech today which do not have debt. They have large balance sheets. They have good business models. They have good moats. So I don't think that we're going to see a crash like we did back then. And I think that we're just going to see a little bit boring period.
Yeah. Okay. And you mentioned in the beginning that we had earnings out of ASML and Taiwan Semiconductor. Did we learn anything in particular from those two?
Yeah, we learned that we have to remember that that semis are cyclical, and we need to respect the cycles that are coming. We've been thinking that PC and mobile phones would come quickly. We've been thinking that cars would be stronger, and I think that people will also start remembering that high performance compute will also hit a down cycle eventually. So you cannot, you if you buy Nvidia at $1,000, then if that's correct, then you shouldn't see prices lower than $1,000 in the next coming years, or you should be a short-term trader,
Yeah,
willing to try to guess the cycles, how they are. But if you're a long-term trader, you don't want to be 100% invested in Nvidia at $1,000 or Supermicro computer at that price, because you're going to see a drawdown within the next 2, 3, 4 years, 5 years if it's really strong.
yeah, and I mean they've all come up a lot. ASML has traded really at really high levels for quite a long time now, and what TSM, I think I bought in around a 12 PE or something a couple of years ago, and it's almost double that now, at least, maybe even more. So they've had quite the run up.
Yeah, exactly.
So I guess it is a cyclical industry, at least. That's uh, that's what we're thinking it still is. So maybe it's
Yeah,
just
it's a
time for a
capex
breather
industry,
now.
so it will be cyclical. It can't be any other thing.
Yeah.
Yeah.
Okay. So what's your take on the sell off this Friday, particularly within this space and AI, I guess too?
Yeah, I think so. I think the AI demand is going to be high. The high performance compute demand is going to be high. It's the customers are big tech. They have large balance sheets and they have nothing to invest in, and they see the big opportunity to invest in something now that makes sense, and that is obviously the next big tech trend. So it makes sense for them to deploy a lot of cash. So you could see a recession coming, and see the demand for high performance compute data centers to be high all along, all through a recession, because these companies are so well funded and just keeps magically creating cash. So
Yeah.
so I think that high performance compute could be strong for a long time. Um, I also think that all the stuff we bought during Corona, it has to be replaced over the coming years. So I think the smartphone and PC cycle will get better, and we have memory is really strong now. So we really like Micron at the moment. Yeah. But yeah, it goes up and down, and I think the market has gone up a lot, so I think it's natural for a for a drawdown now, and that goes for semis as well.
Yeah. All right. I guess it's time to just jump into the first question we've had.
Yeah, or maybe we should
Oh
just
yeah,
take the eToro
that's
portfolio
right.
here,
We
the
we promised
rebalancing.
uh, we promised to just go over the NDI future check rebalancing. So obviously,
Yeah.
let's do that first. Yeah.
Yeah, so here it is, the Q2 portfolio, and yeah, I just made some highlights out here. So we don't have Nvidia, we don't have ARM in the portfolio. We felt they were too expensive. If I should pick two stocks for 10 years, it would be those two. But they were just too expensive, and we've seen that now. They've had a good drawdown now, so good for that, and we hope they fall more so we can take them into the portfolio in 2.5 months. Then we didn't have any elite tech in the portfolio. That's kind of the highest growth SaaS companies, and they've actually been hit quite hard. So that was a good. We simply couldn't find anywhere where the price sort of made sense on a DCF in a DCF model. where we try to look what is the market pricing in, and then compare it to what do we think sounds reasonable. And there were no matches there. And then we have no big tech for the reasons that I kind of stated. And then we have a lot of semi. We have 24% semi. And yeah, we have these. I won't go into them in depth, so we have time for questions. But we believe in vertical integration, software and hardware integrated. We have Nvidia with the CUDA platform. We have Broadcom and Fortinet, for instance. Vertically integrating. We also have Google and Meta trying to do the same or doing the same. Then we believe in edge compute. That's really going to be sort of the where the chip sector is moving. We see high demand for memory, and we see the next generation PCs coming up. And yeah, so AI enabled edge compute is going to be big. And then we kind of have to respect the cyclicality of the semi sector and try to always navigate in not having too big risk and to be diversified well in that segment. And then we have e-commerce is our other big part here. I think the market is underestimating what retail media is going to do for e-commerce. They have the customer data, and they can do advertising real time when the customer is actually in buy mode, and that's the part of the ad sector that is growing a lot. And when these companies come from 1% of revenues in ads to 2% of revenue in ads to 3% of revenue in ads, it's really impactful on the bottom line, because it's like 70-80% margin, these ad businesses. So that really matters. And I think that they are aggregating important silos of data, which is very important for the AI future of the world. So the e-commerce platforms are really interesting. And then yeah, FinTech is also quite a bucket that we've invested in, and FinTech is very weak due to the economical environment, and so yeah, it will get appraisal by investors when numbers get better for the economy, when we hopefully get the rates going down, etc. So yeah, that's kind of the portfolio here. If there are any questions from the audience, then just do come with them during the Q&A.
Yeah, if any of the eToro investors have tuned in, then yeah, feel free to ask about this setup. But if not, I think we'll just jump into some of the questions we've gotten from the live chat. We have Michael asking, "Hey Mads, could you go through ARM Holdings, the case? I'm thinking the 30% dip is an opportunity for buying, but I would appreciate your thoughts. Thanks in advance."
Yeah. So ARM is it's like I said, one of the companies I would buy for 10 years, and it's because they're building a big standard for computing. A chip comes with an instruction set architecture, and for PCs, it's been x86, which was made by Intel when they made the first IBM PC back in the days, and they sort of had a monopoly. AMD got their legal rights to build for the x86 architecture, but they didn't get the court's approval to get insights into it. So they had to reverse engineer the capabilities of building chips for the x86 platform. And it's been a huge thing for Intel to dominate that, and for AMD as well. The problem with x86 is that it's not very power efficient. So if you so it really works with things where we have a direct connection to the power grid. But everything that runs on batteries, it's not good, and so everything on battery will run on the ARM architecture, which is called RISC, um, um, and and um, and what is happening now is that risk has been for things on batteries, IoT, smartphones, edge devices, things we wear, and x86 has been for PCs. And the thing that kept the world on x86 was that all software was built for x86. And then Apple started with the M1 chips to make software or to force people to make software that could run on RISC. And now we see Qualcomm coming with their Snapdragon Elite as well, with a chip for PCs running on ARM's RISC platform, and Nvidia is rumored to go there. AMD is rumored to go there. So I think there will be created software for the RISC platform now in the future, and the world will move to that platform. So I think they'll win a lot of or most of x86 revenues eventually, and then the shift to AI will help them. They are shifting from Risk 8 to Risk 9 now. They're about a fourth through that as I hear them. And the revenues will be higher from the Risk 9, which is their AI prepared um, generation of their chip set architecture. And then they've been investing a lot since they became a part of SoftBank in building IP and research and development, and they're going to make more of the chip design than they have in the past. So if a lot of chip designers are designing something for a USB application or something that needs to be a part of the chip themselves, then ARM will start doing that. They call it subcompute systems. So they will increase the value they make for chip designers and make it easier for chip designers to create chips, make the effort lower, and that should increase their TAM as well. And we see a world moving towards heterogeneous compute. We see Apple, we see Meta, we see Google, Amazon, Fortinet. We see a lot of software companies wanting to make their own chips because they can, when they have a specific workload, they can make it run cheaper on a special design chip. And when ARM on the backend is making it easier to design chips because they make these subcompute systems, then the world will go towards that. So I think ARM will be able to compete with Synopsys and Cadence by doing some of the work that chip designers would do in those platforms, and then just have it ready-made on the IP. So it's sort of and I think that ARM will be for the world what x86 was for the world for 40 years, and now it's ARM's turn to have that dominance and to be able to build on that. So yeah, I think that the price increase was somewhat warranted, and I think that the drawdown now is an opportunity. Yeah.
Yeah.
But it's still heavily priced. Yeah.
It is heavily priced, but the interesting thing about ARM for me is that they're just so incredibly important for the entire industry, right? They've partnered with everyone. There's no exceptions. Everyone uses their architecture for something, regardless of if you're in China or in America. And the thing has been like, and also I guess the reason why SoftBank struggled with them a little bit before taking them public is that they didn't used to have so many ways of making money, like the licenses, the fees they took for providing their designs. They weren't like it wasn't much to speak of. But now as they're a public company now, they're building more and more ways to sort of monetize and help bring more value to the chain. And they're already integrated into every company that design chips, right?
Yeah, totally.
Um, another fun take I think is that you talked about yeah, the efficiency, the power efficiency thing. x86 is sort of like this thing that worked. Like we had to have a way to get started, and back then it just simply wasn't as important to have efficiency, right? We needed power, and all the devices were plugged in anyway. But as you say, now we run a lot of things on battery, but ARM is also coming to big data centers, for example, with Nvidia's custom-made CPUs, and that's because efficiency has become again more important. Now we're drawing so much power, and there's so many computers connected, generating so much heat that that aspect sort of also becomes even more important than it was before. Um, so yeah, it has a lot of things going for it, but it sort of needs to build this whole business model up from the ground up.
Yeah. And it's going to come with a lot of volatility because sometimes people will be looking at this magnificent platform for an investment you can hold for 10 years and prices will go up. And then in other times, people will look at this and say, wow, it's way too expensive. They will look at the PE and say, this has no way to be like this. Yeah.
Yeah. All right. We have Mohammed asking if you could quickly go over the case around MercadoLibre and Grab as well.
Yeah. Um, I think what is so strong about those two companies are their regional dominance for one. They are leaders, and that's really an advantage yeah, they got the scale advantage, and that's a giant advantage. You have a networks effect on these platforms because more buyers will attract more sellers, and more sellers will attract more buyers. And then you have for these two companies, and that goes for C Limited as well, you have cooperating platforms. So you have the fintech part of it, which is so important for this because you can by the data you get, you can really create good prices as a bank. You have an advantage. You know which of your sellers on your platform is going to pay the money back and which are not going to pay the money back. So you can grant loans, you can increase efficiency on the platform, and you can acquire customers or sellers via your fintech products or via your e-commerce products or via your logistics products, and then you can cross-sell to them. So that's a great advantage for these platforms with cooperating platforms. We saw Square Block buying Afterpay because it was a great advantage to have these two platforms together. And these Grab, C, and MercadoLibre, they're building it all together. You have Kaspi in Kazakhstan doing the same thing. You have Allegro in Poland and Central Europe trying to pull off the same business model. Yeah. So yeah, MercadoLibre is trading in a sort of a channel, and it just broke out of the top in the beginning of this year in January and was ahead of the market. All other tech stocks were not really strong yet, and so it started falling, and right now it's at the bottom of that trend channel. So we were actually lucky to be selling it at near the top because it was so strong, and all our other positions were kind of weak, and now it's the other way around, or yeah. MercadoLibre is more weak than the other stuff.
Mm,
So yeah, I think MercadoLibre is good right now.
yeah, it's they're doing a lot of things, and it seems they're doing everything right for their
Yeah,
region.
yeah.
Yeah. Okay. Are you ready, for Qualcomm here.
Yeah.
We have Barrett asking Qualcomm over the next 5 years. How do you see it? It fell back 8% in the past week. Is this just a correction, or what's your take on this stock?
Yeah, it's so they've been the company of mobility, of cell phones, and the founders of Qualcomm were actually the guys sort of taking a lot of patents on the technology needed for digitization of the cell phone signal, and they've been having these patents and been something you needed for mobile phones, for modems, and for mobile internet access. And now they're one of the biggest fabless chip producers in the world, building the chips that we use in the smartphones, and um, and 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 they're still dominating. We have Huawei being able to do a 5G modem without Qualcomm in their newest chip, but otherwise you need Qualcomm licenses and products in sort of smartphones, in Internet of Things, and the auto sector will be a growth opportunity for them as well. And another thing is that 5G telephones are not really that penetrated yet. I don't know if it's like 20 or 30% or something, but it's still quite nascent, and that would also fuel Qualcomm in the future. And now they're moving into PCs, and it's not their first attempt, so we'll have to see whether they succeed in that. But I don't think it's necessary for them to be an interesting investment right now. And then we also have this moving to the edge of compute. So there's going to be a lot more compute in our smartphones in the coming years, and that's going to help both Qualcomm but also ARM, because the royalties fees will increase because there are going to be more nodes and more advanced nodes on the edge. Do you
Yeah.
have anything to add, Jesper?
I mean, like ARM, Qualcomm is sort of the backbone of the whole chips industry, at least for mobile. Like every Android vendor on the planet uses Qualcomm outside of Samsung in some areas. I looked at them a couple of years back and actually ended up not buying in because I was worried that all the Chinese smartphone vendors were gonna go and sort of design their own chips uh, back, under sort of the bubble tech market bubble a few years ago. But that thesis didn't actually end up coming to terms. Like Xiaomi, Huawei, Vivo, all those big ones, they were all looking at that time to design their own chips, and none of it has come to fruition. So it seems that that market is perhaps a little more difficult to compete in than it may seem, and at the very least, it's very expensive. And another fun thing is that Huawei's self-driving cars in China, which are actually really impressive, they're all using Qualcomm chips rather than their own. They're importing the ones from Qualcomm because they're not 5G chips. They really only need 4G on them for now, and then there's no restrictions for Huawei to sort of put them in the cars, which I think is pretty funny.
Yeah.
Um, yeah. We have Jacob saying here, what do you think about the Nvidia fall that happened Friday? It fell 10% in one day.
Yeah, yeah. I think like I started out with. I think when Iran shoots missiles at Israel, volatility goes up. So you need tech stocks need to price that in. And next, I think that the to the moon narrative for chip stocks was sort of a little bit under pressure because of ASML and TSMC. So I think it's just a feeling. Investors were reminded that this might not be a one-way ticket. You could actually see a drawdown. So maybe some took some money off the table. And then the thing on Friday was that the lack of pre-announcement of earnings from Supermicro Computer, which is the preferred what do you call it, vendor or the preferred partner for high performance compute data centers for Nvidia. So that could imply some softness for Nvidia as well. And then lastly, the news about Nvidia H100 chips being sold in China, which is sort of also made the market a little bit nervous. Maybe news like that is something like it increases volatility again, and you need to take a little bit off the table.
But yeah, it's if H100s are being sold in China, it's obviously gonna
They
end
are.
up being Nvidia's problem to some degree, even if they're not the ones doing it directly.
No, they're coming in from various countries. So it's been a problem all along, and they're not that big, and you can take them. They come with a lock, sort of a locational lock, but
Mm.
if you make them look at the world through a VPN tunnel, then you can circumvent that. Or if you just turn off the internet, they still work.
Yeah,
So yeah,
I don't think they can really stop it. Like Nvidia also released a graphics card, a consumer grade graphics card, I think 2 years ago, which had sort of crypto mining blocked to an attempt to sort of avoid crypto miners eating up the whole market and all the gamers getting mad. But within, I think, a day or two, that whole thing was broken. The cards were opened up for crypto mining and they were all sold out and everyone was mad again. So I don't think, no matter what they do security wise or logistic wise, it's not gonna happen. As long as they're portable, like you say, they're gonna be uh,
yeah.
sold there to
At
some
least
degree.
for small scale, it's going to
Yeah.
be nearly impossible. But for big scale, it's probably
Yeah.
another.
And I mean, I guess regulators probably know that, and you can still, as Alibaba or Tencent or whatever, you're still not able to go out and just buy a whole bunch of H100s, and that's the idea, right? So it
Yeah.
still works, even though there's gonna be caveats like that.
But hey, I think if you don't have Nvidia shares, then I would definitely buy some here. And if you have a lot, I would not buy.
Yeah.
I would sort of be a little bit annoyed I didn't sell any when it was when everybody was just pure optimists. But
Mm.
yeah,
I mean, when we did the Q1 rebalance of the eToro portfolio, we analyzed it financially, and we came to the conclusion that surprisingly it was actually fairly valued at that point.
yeah,
We maybe all sat there thinking that it had to be overvalued because it's run up so much, and now it's
yeah.
gone down a little bit. So yeah, it might make sense to keep an eye on it again. Um, okay, let's see here. We have Morten Dam from Virum saying, I would appreciate your assessment on Auto One Group and HelloFresh. Thanks for a fantastic live Q&A.
Thanks, Morten. Appreciate that. So, Auto One is yeah. I really like Auto One, and I really like HelloFresh Group. Auto One is a European used car vendor that has locations in many countries in Europe, many locations, and they're building a Carvana inside the belly of this. It's called Auto Hero, and I think Auto Hero's revenue share of the company is something like 20% now, and it's growing fairly quickly. They have trucks with glass windows in them, so you can see the new car coming. And they seem financially stable, and they are about break even now. Yeah, so they seem to be the European Carvana that seems to be pulling this off. And European tech has been trading extremely weak the past year or something like that, whereas American tech has been appreciating some. Then European has just been like, nah, we don't believe in Europe and we don't believe in tech, so we're just not going to go there. And I think that's what is hurting HelloFresh Group as well. So HelloFresh Group is a meal kit company, and they had a pull forward of customers during Corona, and then we've been waiting for growth to stabilize again. The thesis before Corona was that they would grow 30% a year. The competitors are not other meal kit companies. The competitors are supermarkets, because it's an alternative way to get food on the table. Now, HelloFresh Group has not started growing their meal kit business yet. And it really disappointed during the autumn, and that's why they kept selling off. There's a lot of credit card data, EBIT data, some stuff like that. So the big funds will know where the sales are heading, and the share price will trade accordingly to that. But they bought a company called Factor in the States, which is selling ready-to-heat meals, and it's growing rapidly and seems like a big success in the States. And you could argue that the current valuation of HelloFresh Group is just justified just by Factor, the growth there and the trajectory it offers. And then I believe that meal kits are going to come back to growth. When you hear them talking about their businesses, they say we are direct to consumer business. That means that they have a truck that parks in front of your house where you can get your groceries packed in a way, and they could sell other stuff. They could sell beers, they could sell wine, they could sell beverages, they could sell all other things, and they're working on that. HelloFresh Group is selling pet food in the States as well as their new arm. So, and that's just to illustrate that there are a lot of opportunities within that. Yeah. So I think these are really good entry points for those two companies.
Yeah. Is Out of One doing mostly digital sales like Carvana, or are they also doing sort of the more traditional model?
Yeah, they do both. So their legacy business is kind of like what we know, just a big chain. So they have cars, they have infrastructure, they have facilities for readying the cars, and then they are building Autohero, which is the Carvana business where you sell online and you get the car delivered to your house
Okay.
and all that stuff. So yeah, they're doing the Carvana playbook.
I don't know them very well, but I'm thinking that sort of an initial thought I get is that EU is a lot more fractured than the Americas.
Fragmented, yeah,
So are they in
more
all
fractured, yeah.
EU countries, or are they only in a few ones right now?
No,
Do
I
you
think
know?
they're in a lot of yeah, they're in a lot of Europe. I don't know the exact
No, no.
locations, but they're in France, they're in Germany, they're in Benelux, they're in Austria. So they're distributed. So they sort of have the national legal puzzle
Bureaucracy whole thing.
done already. Yeah,
Okay, yeah.
good
It's probably
point.
there's probably is a lot of that like state to state in America as well for Carvana, but I just didn't.
Yeah, there is. Yeah, exactly.
Hmm.
Exactly. It sometimes it reminds you a little bit about Europe.
Okay, let's see here. We have GA asking a little bit about eToro and the setup, how to join, the fees, and the tax perspective. I think maybe I can just answer that one quickly. It's true, like he mentioned himself, that eToro doesn't report your or doesn't file your taxes for you automatically, like we're used to for some of the other Danish brokerages. However, they do make an automatic report for you to sort of just send off to the tax authorities. It's a little more complicated, but it's not the end of the world. The great thing about eToro is that it's easy to sign up. You can use your Google or Apple account or whatever you want. Uh, there are no fees for our fund, NDI FutureTech. The only thing you'll experience is like on any other zero commission brokerage, there's going to be a little bit on the spread between the price that the stock is offered for and what you actually pay. But we're talking cents here. It's very, very little compared to the brokerages we're used to here in Denmark. And then how it actually works is that when you go in and sort of buy into our portfolio there, you actually end up copying it to your own portfolio. So eToro is really famous for this whole copy trading thing where you really just have your own funds, and then if you follow someone or a fund, a smart portfolio like ours, you just copy their moves going forward. Yeah. Is that
Yeah,
a good enough explanation, or do you want to add
yeah,
something, Mads?
that's perfect. And I actually think that it's really good with the next question here. Messi Master 797 says, if we see rates go down again, do you think fintech companies will lose profitability and therefore become more risky, or can they scale into profits over time? So I think what Messi Master is alluding to is that a lot of fintech companies have actually been doing some quite good earnings on their float or on the cash they have on their balance sheet, or because they have not been they don't have yeah, the money that comes, the money that they're able to pay out higher rates than banks that have that might have that might have too many long bonds with long duration on their balance sheet from earlier on. So a company like Robinhood has been earning a lot of money on rates, simply on the deposits from their customers. Nubank has a big float and earns a lot of money, and the higher the rate is, the more they earn. So you could, if that goes down, you could see that competitive edge towards the banks maybe diminish a little bit, and I guess that's where Messi Master is going. Uh, so um, so I think eToro is a really good example because they're able to offer um, offer services for a very, very low fee. And I think that tells you something about the competitive strengths of these platforms, that their products are so much better and so cheaper, simply because they're built digitally, and they can scale very easy um, because they have no bricks and no people coming into them. We have Robinhood's latest offer, where they offer, I can't remember the interest rate that they offered, but it was very, very high. And then they offered a new credit card where you get 3% cash back on everything you buy. So that's naturally going to be an expense for Robinhood in some instances, but they're simply able to earn money on very small fees because they have a lot of scale in their businesses. So I think that um, I think people are underestimating the competitive advantages of the fintech platforms out there right now, and I think the market is pricing them low because they're afraid of the loan books of companies like SoFi, a company um, like Upstart is really just running on a very low burn and not much. But once economy goes better, so that the risk on those loans go down, I think these companies will be appreciated more by the market.
Yeah.
And I think they're next generation of financial services because they're built for the present time.
Yeah. Another interesting thing about eToro is that they've recently expanded into wallets with the eToro wallet. So a way to get funds onto your investment account at eToro now is through the eToro wallet. And while that's probably at this stage very basic, I mean, it's easy to see where it could be put to use, like with a credit card in the future or buying crypto, a whole bunch of things. So yeah, there's a lot happening there. Let's just finish up with a final question. Um, this is from Ernest. It says, question for Mass and team.
Friend of the house.
What's the role of a car dealership in the EV world? Will car dealerships still be around with the push to direct to consumer and far less maintenance on EVs? That's actually a really interesting question.
Yeah, it's something that I've been thinking about a lot. Where is all of this going in the future? And I think that a company like Carvana, they sell and ship a big item, and that item comes with insurance and financing. And that's kind of what they do. And Ernest's point here is that EVs are not so complex uh, to um, to make ready for sale again. There are not so many parts that can go broke, etc., and they'll probably be easier. So the maintenance part of this will maybe be less, but the insurance part and financing part will kind of be the same, I guess. And then we'll start sharing cars maybe and have robo taxis and where will that be? But I think that transition will take more than 5 years.
Yeah,
Also more than 10 years, maybe something more like 20 years. And I think there'll be big items that need to be bought and sold again. It could be the Optimus robot from Tesla. If you've had a big house with a lawn, so you've had the gardener Optimus version that can do your garden, and then you move to an apartment and you need another Optimus that is not so big but can move around in your apartment, and then you'll trade it. So I think there'll be drones and there'll
yeah.
be
Other
robots.
things you can take to the
There'll
dealership
be
where,
stuff. Yeah,
yeah. I think
yeah.
as an early Tesla investor, I gotta say that I absolutely believe that the dealership model is dead, at least for new cars. I think the way that Tesla streamlined that whole experience of selling cars online is certainly the way things are going. But for used cars, I do think it might be a little different. I certainly think I'd be more comfortable, you know, still having all those insurances and maybe some guidance surrounding it when buying a used car. And
Is
as
Tesla doing resale of used cars?
they, yes, Tesla do sell used cars directly that they sort of refurbish. But they're, given that no Tesla cars are really that old, it's sort of it's a little bit of a different model, I'd say, because it's cars that have been used maybe 2, 3, 4 years max, and then someone trades them in for a new Tesla, Tesla sells them again after,
Yeah. Okay.
shining them
Tesla
up.
has the data on how they've been driven and whether
Yeah,
they've been in an accident or something. So they
yeah,
actually got a lot of ability to set the right price and to
yeah.
take on some of the risk.
But like you said, it's really difficult looking further out in the car market right now because we are, hopefully on the edge of on the verge of, autonomous cars or whatever else we end up sitting in going to and back from work. So yeah, 5 years, I'm pretty sure Carvana is still really relevant. 10 years, probably, maybe not. And going further than that, it's really impossible to say. We have no idea what that world looks like.
An interesting fact about Carvana right now is that they have 1% market share now in the States.
Yeah,
So even though they are taking market share in a shrinking pie, that should be somewhat achievable. CarMax was out with some poor numbers, and it actually seems like Carvana is growing 15% from what rumors are, and that they would really be taking market share. If that is how the numbers pan out. So yeah, but I think we have to wrap it up, Jesper.
yeah, we do. So thanks for tuning in, everyone. We will be doing this again in 2 weeks. I can't remember the date right now. I don't know if you do, Mass. Uh,
It's 14 plus 21, so it's the 35th of April. No, that's
that
in
sounds
May.
wrong.
Yeah.
All right. It's probably at the
Yeah.
beginning of
First Sunday in May.
May. Yeah. All right.
Yeah.
But thanks everyone for tuning in, and thanks for all your great questions. If you have some for next week, feel free to reach out on any of our social channels. Otherwise, have a great night. Bye,
Yeah.
guys.
Bye, guys.